Hello, everyone, and welcome to today's webinar. Today, we're going to be covering choosing the right employment type that minimizes company operational costs. My name is Ryan Tan, and I'm here with the team at Lawpath. And today, we're going to be doing a collaboration with Pop Business, who we work closely with. They're our accounting partner who do chartered accounting work. And we do have James from Pop Business. He'll be doing presenting today on different employment types, as well as outsourcing and different things that you should be aware of in terms of your obligations from the accounting side. So just as everyone's joining the webinar now, I just wanted to welcome everyone. And if you can just pop in the chat, let us know where you're from and what business line you're in. We do have people from different business lines who do join the webinar. Welcome to everyone joining. Now, if you do have any questions in today's presentation, feel free to pop them in the Q&A box. We do have the chat box working as well, so you can always pop your questions there in as well. So just on to today's agenda and what we're going to be covering, we'll go through a bit about Lawpath. A lot of attendees today, you're probably quite familiar with POP, and you might have worked with them before, but you might not be too across what Lawpath offers and how we can help. So we'll be going through that. We'll be going through Pop Business and how they can help with all your employment questions from an accounting perspective, as well as outsourcing and accounting advice. We'll be going through topics such as the different types of employment agreements, contractors, and then outsourcing, and a few things to be aware of. And then lastly, at the end, we'll have a special offer for attendees, and we'll be doing a question and answer time as well. So if there's any questions you'd like to ask James from Pop Business about your accounting, or even on employment, contractors, and outsourcing, feel free to stick to the end where we will cover that. So I just wanted to go into what Lawpath is and who we are for those who are unfamiliar. So here at Lawpath, we build and help businesses with their online legals and make them more accessible. So as it says there, smart, simple, legal, small businesses. And we do this through our legal documents library, as well as our range of plans that focus on advice for legal and accounting. So again, you can create legal documents. We have a template library which you can go through and edit the documents to meet your specific business. You can manage compliance on the platform. You can connect with lawyers on demand in a single platform as well. So if you have any questions about documents that you're working through or things that you might be going through in the business right now, either from a reactive standpoint or a proactive standpoint, you can always book in a call and speak to our lawyers and our accountants. And we've served over 300,000 businesses here in Australia. We've saved businesses over $100 million in legal fees. We've got 5-star reviews on Trustpilot. So very happy with the impact that we're having. And there's a lot more businesses as well that we can help. So how can Lawpath help? Well, firstly, as I mentioned, we do have contract management for your business. So our legal documents and templates library has over 350 documents, and these include things like your employment agreements, employee handbooks, company registration documents, intellectual property documents, anything that might require for your business, that comes from a legal document. We most likely have it on the platform. So you can create these legal templates and customize them for your specific business. You can also use our e-signature feature. You can send these documents off to your candidates, your employees, your vendors, or other people who are doing this work with you. And again, get the full contract management solution. You can add your company branding inside. And lastly, as well, you can add different team members in there. So that's the contract management side. Now we do have personalized workflows. So we're constantly building these out, same as the documents library. We've just added, I think, 12 documents this week to the library. Same with the workflows. They basically cover all the legal and the non-legal steps when it comes to taking several actions. For example, whether it's you're hiring an employee, you're firing an employee, or you're collecting a debt. There are workflows that are personalized for your specific business, and they'll walk you through all the legal and the non-legal steps and directly link you to the documents. So it's a good bridge between getting advice from a lawyer and just using the documents. And then lastly, booking in legal consultations. If you ever need any advice from our lawyers or our accountants, perhaps to review a contract or get some clarification on specifics in the contract or something going on within the business right now, you can book these in on demand on our platform with our calendar link, and you can simply get those calls booked in and be speaking to lawyers and accountants as well. So want to introduce James here. James is one of our senior accountants at Pop Business. He's going to do a bit of an introduction on himself. So take it away, James.
Thanks, Ryan. Hello, everyone. My name is James, and I'm a chartered accountant at Pop Business. Today, I'm going to be going through the accounting and tax implications of hiring an employee or engaging a contractor to do work for your business. Okay, so I'm going to tackle this issue from more of an accounting and tax point of view. I'll be discussing the differences between the two and the compliance requirements from your end as a business owner when you're engaging with a worker to do work for your business. Cool. Just moving on, Ryan. So I'm going to go through quickly the different employment types. So when we say employment types, we're talking about hiring an employee. So there are 3 different employment types, and each of those employment types will require an employment agreement put in place between yourself as a business owner and the employee. So what is an employment agreement? It is a written contract between you and your potential employee, and it sets out the enforceable terms and conditions that govern the employment relationship. It includes things such as the salary or wage that they're going to be paid, the pay frequency, the probationary period, and many other things. So it is imperative that this agreement is put in place so that both parties know what the expectation is and there is no miscommunication or misunderstanding. Okay, so the different types of employments, you have full-time employees, and a full-time employee by definition of Fair Work Australia is someone who has ongoing employment and works on average 38 hours a week. So that's very important. There is a commitment of ongoing employment, and this could be on a permanent basis or a fixed term contract. Okay, full-time employees are usually paid an annual salary, and they accrue at least 20 days of annual leave and 10 days of sick leave a year. Full-time employees are also eligible for parental leave if they meet the conditions. So there are a set of conditions that you need to meet in order to be eligible for parental leave. So moving on to part-time employees, the Fair Work Australia definition of a part-time employee is anyone who is employed on a permanent or ongoing basis that works less than 38 hours a week. So the difference there is just the time, the working requirement per week. So the weekly hours are agreed and set out in the employment contract. So it is important to make sure that you have the working hours set out in the employment contract. Part-time employees, they do accrue annual leave and sick leave, but at a prorated rate. So if they only work 4 days a week, then they will only accrue 80% of the annual leave accrual. Sorry, just going back, Ryan. Part-time employees are also eligible for parental leave, given that they meet the conditions. And the last one is casual employees. So a casual employee is someone who accepts an offer knowing that there is no commitment of ongoing work or guaranteed work. So that's the difference between casual and full-time and part-time. There is no commitment of ongoing work. It's not a permanent basis, right? So the main difference is casuals are paid on an hourly rate. This could be set out by an award or just an agreement between yourself and the employee. And casual employees do not accrue annual leave or sick leave. And the thing to be careful here with casuals is if they are working under a specific award, for example, a hospitality award or a childcare award, there might be minimum conditions in that award that you must meet as an employer. For example, a minimum daily requirement. So you can't roster someone for, let's say, an hour. Right? There must be a minimum hourly requirement for you to roster them on. So just because there's no ongoing commitment of work, you may still need to meet industry award standards. So just be careful of that. Yep. now I'm going to discuss the different factors to consider when bringing on an employee, whether it be full-time, part-time, or casual. So I'm going to talk firstly, the main thing that we're going to talk about is the tax and super requirements. So if you are paying an Australian employee, you must withhold tax on their pay every pay cycle. Okay. The reason for this is the government wants people to prepay their tax, and the government would rather do refunds at the end of the year than collect debt at the end of the year, right? So that's why that system is in place. So you must withhold a portion of tax every time you pay an employee. The amount that you cut from their pay is determined by the ATO. So they set out the amounts to be withheld, and that's determined on the gross wages and the pay frequency. So if you're not sure about how much you need to withhold from your employee's pay, the ATO actually sets guidance for this, and this is built into most accounting softwares. So you don't really have to think about it. It should be automatic. The second thing you need to consider when paying an employee is that there is compulsory super that needs to be paid on top of their gross wages. So from 1st of July 2022, compulsory super is 10.5% on top of gross wages. And previously, there used to be a minimum working threshold in a 4-week period. So if you did not work more than if you did not get paid more than $450 in a 4-week period, you were not eligible for super. That minimum is now gone. You have to pay super from the first dollar you pay any employee. So those are your requirements when actually paying the employees in terms of tax and superannuation. Now we're going to talk about how exactly you meet these obligations from an ATO reporting standpoint. Okay, so PAYG tax, this is reported in an activity statement. It's either an installment activity statement or a business activity statement, depending on whether or not you're registered for GST. Okay, so the frequency can either be monthly or quarterly. And in this form, you basically you declare to the ATO how much wages you paid in a certain period and how much PAYG you withheld, and then you pay that amount withheld to the ATO. Okay. Next thing, when you are processing payroll for your business, you must do what's called single touch payroll. It's a reporting system to the ATO that you must file every time you do a pay run. And this pretty much reports to the ATO how much you paid each employee and how much super you owe to them. Okay, so this is an electronic system that's replaced the year-end group certificates. So previously, a few years ago, you would have had to print out a group certificate for the year, a PAYG summary, and mail it to your employee. That's all gone now. It's all cloud-based. It's all electronic. Okay, and then another thing to note, at the end of every financial year, you have to do what's called STP finalization. So this needs to be done within 14 days of the end of the financial year. If you and again, this is the information that goes into each employee's MyGov account, so they can do their tax return. So that's why there's a very fast turnaround for this. The ATO allows you 14 days to get this done because people want to get their tax returns done. And the last consideration is the actual processing of payroll in your accounting software. Okay, so there are free accounting softwares out there. Pretty much it is a requirement now that you do your payroll through a cloud-based software just because of the single touch payroll requirements. There are free softwares out there, but they generally only specifically account for payroll. You want to look at a all-round solution which captures your accounting as well as your payroll, so that you don't have to integrate the two. So Xero and MYOB are great options. They provide all the tools for you to process your payroll and meet your tax and superannuation requirements. And lastly, information that you require to process payroll in the software. This is you need to do this by law. You need to have your employees sign a TFN declaration and a superannuation standard choice form, and you need to keep that on file. And you need these details in order to do all these tax lodgements and superannuation payments. So these are the main factors when you're considering bringing on an employee. You have your tax, your super, you have to do the reporting to the ATO, and then you actually have to do the accounting for it all, okay? So as you can see, there is quite a lot you have to do as a business owner when bringing on an employee, and it should factor into your decision on whether or not to bring in an employee or not. Okay, so moving on to the next sort of option that you do have, it's you can engage in a contractor. So what is a contractor? Okay, a contractor is a person who agrees to do work for your business to fulfill a specific task. Okay, but they are not a part of your company. They don't work for your company. They are just simply doing work for your company. So the difference between the two would be, with a contractor, there is no promise of ongoing work. There is no commitment of ongoing work. They are simply there to produce a result, okay? And, it is very important to make sure that all the terms and conditions and all this are captured in a contractor agreement, because quite a big focus area for the ATO, because there are a lot of people who are engaged as contractors, but the nature of the relationship is actually an employer relationship. And the reason for this is they want to bypass the PAYG reporting and the super reporting. Okay, so it is a focus area for the ATO, and it is a high risk area. So when you are engaging a contractor, you have to make sure that it is in fact a contractor relationship, and that this person that you're getting to work for you is being paid to produce a specific result and not being employed on an ongoing basis. Okay, so just moving on. So I just want to touch on the sort of 6 characteristics the ATO looks at when determining if someone is a contractor or not. Okay, so the ATO clearly states 6 factors which show that someone is a true contractor, right? Because there is no right or wrong answer. It's quite grey, but there is a guideline, okay? And each of these pillars or these factors determine whether you're a contractor or not. So I'll just go through them quickly. So as a contractor, you have the ability to subcontract or delegate the work. Okay, so you as a contractor can bring someone else on to do the work for you. You don't have to do the work for yourself. This is different to if you're an employee, where an employee must do the work themselves because they are employed by that person, right? The second one, which is the biggest one, you are paid to produce a specific result, right? You are being brought on to produce something, and this has to be tangible, right? So this can be done using an hourly rate to calculate the total cost of the job. However, it cannot be paid on an ongoing hourly basis, because that's what an employee gets paid. They get paid on an ongoing hourly basis. Contractors get paid to do a job, and that's it. Okay. As a contractor, you are also required to produce your own equipment and tools to complete the job. You are also legally liable for the work. So if you make a mistake or you make any defects, it is your responsibility to fix that mistake. Okay. As a contractor, you will also have full control over how the job is done. You don't take direction from the person hiring you, or you may take some direction that is listed out in the contract agreement, like specifications on what a job needs to produce at the end, but you have full control over how you actually do the job. Okay, and as a contractor, you are a business in itself. You are running a business. You are free to refuse and accept work. There is no restrictions on what you can do outside of the engagement with the person you're doing work for. Okay, so this is why it is imperative that you have a contractor agreement, which shows that you meet these 6 sort of characteristics to be classified as a contractor. And it is important because the way you treat a contractor and the way you treat an employee is different for tax and superannuation purposes, okay? Which I'm going to go into now. So as a contractor, sorry, just going back, Ryan. Yeah. So just going on, if you are truly a contractor, if you are engaging a contractor, you do not have to withhold tax on that payment to the contractor. The only time you have to withhold tax from a payment to a contractor is when they haven't given you their ABN. Okay, that's the only time. But you know, as a contractor, they are looking after their own tax obligations, so there is no PAYG withheld on that payment. Okay, so there's no need to withhold tax and remit that to the ATO. Superannuation. Generally, superannuation is not payable on payments to contractors. However, if the job is for someone's personal skills and labor, there may be superannuation payable. Okay, so you need to look at the work that you're engaging someone to do, and you have to look at the contract, and if more than 50% of that contract is for someone's personal labor and skill, then you may have to pay super on top. So the ATO gives pretty good guidance on this situation. So if you want to have a look, just type in Google superannuation for contractors, and the ATO gives pretty good examples on which type of contractor attracts super and which doesn't. Okay. In terms of ATO reporting requirements for contractors, there isn't really any unless you're engaging a contractor in a specific industry. So I'll list out the industries that do need to do what's called TPAR reporting, or taxable payments annual report. So the contractors, so if you're engaging contractors in the building and construction industry, the cleaning services industry, freight or courier, IT and security services, then you may have to do what's called TPAR reporting at the end of the year. So it's basically reporting to the ATO that you have engaged with these contractors throughout the year, and there is eligibility requirements on whether or not you have to report or not. So definitely check those out if you are engaging contractors in those industries. Okay, and lastly, how to pay contractors from your business. So like we went on before, a contractor is running their own business, so they should be issuing you with an invoice every time payment is due, and that invoice should have their ABN on there, and if they're registered for GST, it should have a GST component. Okay, so it's quite simple when paying contractors. If they truly are a contractor, you just pay an invoice for services rendered. Just moving on, please. So now, is it better for you to have an employee or a contractor for your business? Okay, so I'm going to go through 3 factors you need to consider. Okay, the first one is the work that you need done. Is it ongoing, or is it for a specific task? Is it a project that you need help on, right? So if it is ongoing work with no deliverable at the end, you kind of have no choice. You have to bring on an employee, because the risk here is if you bring on a contractor for ongoing work, it doesn't matter that what the contract agreement says. If the nature of the work is ongoing, then they are an employee, and you have to withhold tax and superannuation and pay superannuation on those payments. So if you incorrectly classify an employee as a contractor, and the ATO doesn't audit, then you could be in for a bit of trouble on missed PAYG and missed super. So the ATO is quite heavy on this, and yeah, so you want to make sure that the type of work you have, you employ the right person. So definitely, if it's ongoing, you have to bring on an employee. But if it's project work, project based, then you have the option to get a contractor. Okay. The second point or factor to consider is cash flow forecasting and cash flow. Okay, so with an employee, you are withholding tax on their pay, and you have to pay their super, right? So this makes it difficult to sort of forecast your cash commitment going forward, because yes, you have to pay the employee, but you've got this withheld tax that you need to remit to the ATO at a later date. And then you have this super that you owe them that needs to be paid at a later date. So it makes forecasting quite difficult, because you don't know exactly what the cash outflow will be in a certain period, because the money you owe actually falls in later periods. Okay, so as opposed to a contractor, you know how much you're going to pay them because it's going to be in one invoice and you just pay the amount out. There's no tax that you have to consider for, and there potentially won't be any super that you have to plan for. Okay. And the last point, like I said, the last point is, yeah, the importance of correctly classifying the worker you employ. And I've already touched on that point. You know, there are severe implications if you incorrectly classify a worker, mainly if you are classifying an employee as a contractor in order to avoid PAYG and super. To the ATO, that's a big no-no, and it is also a big focus area for the ATO. Okay, so those are the three factors you need to consider on making the decision to bring on an employee or a contractor. Okay, so now just going back to the context of this webinar of, you know, choosing the right employment type to minimize operational costs. So when you're thinking about employees and contractors, generally the rate that you pay them will probably work out to be the same. It's not gonna vary too differently. But if you want to minimize costs, you might an option you do have is offshore outsourcing. So you know, there are benefits and risks of offshore outsourcing, and I'm going to go through them now. Okay, so the main benefit of offshore outsourcing is that it is significantly cheaper than onshore employees or contractors. You know, due to the the labor markets overseas, for example, the Philippines or India, their working rates are a lot cheaper than they are in Australia, mainly due to the cost of living. Okay, so if you have any repetitive tasks or any administrative tasks that you are paying someone onshore to do that you think that can be replaced, can be done overseas for a much cheaper rate, then that's a benefit, right? There is a significant saving there if you pay an offshore contract to do sort of repetitive, like non-revenue generating activities, right? So it could be filing emails, it could be raising invoices, it could be bookkeeping, for example, or bank reconciliation. Those sort of things are the activities that are repetitive and that can be sent offshore. Okay, so that's the main benefit of offshoring. Obviously, the cost benefit. I'm going to talk about the sort of downfalls of offshoring as well. Okay, so obviously there is a training component there. So you're essentially bringing someone on to be part of your business, and you are paying them. You have to spend time training them, and you know the communication over video call won't be that great, and yeah, it's a lot harder to train someone overseas than to train someone that's onshore. Okay, you know, if you want someone that's good, it's obviously going to cost more. So it might be hard to find an experienced offshore laborer to do the work for you. So that's another downfall, finding the right person. You might have to go through a few before you find the right person. Okay, and you know, in order to make sure that you're getting the most out of offshoring, you still have to track performance of that employee somehow. Okay, so there is going to be maybe a higher level of management required to make sure that, hey, is this offshoring actually saving me money? Because if it may be cheaper per hour, but if they're taking triple or four times the time, then I'm back to having an onshore employee. So there's no real cost saving there. So you do have to manage the time taken to do these tasks and to ensure that there is actually a cost benefit to you. And yeah, those are the benefits and risks of offshoring. So I'll pass it on to Ryan now to talk about how Lawpath can help.
Thank you so much, James, for the comprehensive overview. So just wanted to do a segue into how Lawpath can help. Obviously, with employment being around law, there's a few different plans that we have available that can assist out within the employment and HR space. So on the left-hand side, you can see here our essentials plan. We do have the 350 legal documents for your business. Now, included in that is more than 108 different HR and employment related documentation. So all your standard employment contracts, employee handbooks, conversion letters, offer letters, anything to do with those kind of matters that you might require. If you do require subcontractor and contractor agreements, we do have them in the platform, and they're very specific around things like non-solicitation of your clients and restraint of trade clauses as well. So in the middle, we have our legal advice plan. So if you have the documents and a lot of what James has spoke about, that's really got you thinking about your business and compliance, and you want to go through things like awards or working out whether your workers are contractors or employees. The legal advice plan, this is our bread and butter, and this is what we recommend to clients to jump on and to talk to us about their business, to do a full compliance review through our accelerator program as well, to go through the business. But basically, you do get unlimited 30-minute phone calls with our lawyers each month on new legal topics. So it really complements that documents library well. Now, again, one thing to point out is we do offer contract review up to 4 pages in this one. So if you have other contracts that you have from other lawyers or something from our platform you want to have a look at, you can review those within the call. Now, lastly, the legal and accounting advice. This is a phenomenal plan that we've partnered up with Pop Business to deliver. So James, again, one of the senior accountants at Pop, you can chat with him. We've got a few other accountants on the plan, but this one gives you unlimited 30-minute calls with your accountant on new accounting issues. So again, it's everything that's included in the previous 2 plans, but just a bit more value. And the accounting plan does have its own accelerator program. Now, the whole idea of the accelerator program for both the legal advice and the accounting advice, plans is that it allows you to be a bit more proactive throughout the year. So for the legal advice plan, if you wanted to review your privacy and insurance policies, your commercial agreements, your employment agreements, your intellectual property, and potentially even capital raising, these are all topics of the accelerator program, which you can get for free right now on this plan. For the accounting advice plan, it does have its own accelerator program. So as you can see here, there's 6 different topics that the accountants can go through with you in no particular order or time frame, but these are just put in here to kind of give you prompts to think about these things. So whether you're looking for payroll processing and reporting queries, how to use your accounting software, how to program it, like James said, for single touch payroll. Topic 2 on basic tax minimization structures, so how you can save a bit of money and structure things within your accounts. Topic 3 on a general review of group structuring, focused on asset protection, again, and tax minimization. And the remaining topics, again, on the ongoing support, understanding GST and reporting requirements. And lastly, ensuring that you've got internal processes to basically forecast your obligations. So to pay GST, PAYG, super, year-end tax, and monthly reporting, as well as budgeting the cash flow to meet those liabilities. So these are all great topics. And again, you might not be having a legal or accounting issue right now that you need help with, but surely through the accelerator program on both these plans, you can sit down with the lawyers and accountants and do a comprehensive review of your business. So today's special offer for everyone on the call is our legal advice and accounting plan. Normally it's $293. You saw it back in the slide there. So it's nearly $300 a month. And it's incredible value because not only do you have the calls with the lawyers here, but our accountants, such as James here at Pop Business, they're chartered accountants. So they have a lot of experience around, structuring and, different advice within different industries as well. So the offer is, instead of paying $293 at full price, we've got a 3-month offer for you where you can get this plan, jump on it, pay monthly. It's a 3-month plan for $199 a month. You get all the benefits in the legal and accounting advice. I get some tax advice as well. You've got the contract review. You've got all the documents there. We do have an ASIC and ATO agent service on this plan as well. So what that means is that if you require company changes to be made, such as a change of director or a change of address, our company's team can reach out and do that on your behalf. So that just saves you further time. We do have e-signature built into the platform as well. So again, it's a phenomenal offering. You'll get free access to the accelerator program on both the legal and accounting advice plan as well. So this offer is not available online, but for all webinar participants who are on the webinar here today. So if you are interested, please type yes into the chat and one of our team members will reach out to you after the webinar. We'll give you a call to speak about your specific business and how we can help. But at the same time, you might be a customer with Lawpath. You might be on one of our plans right now and you've got some queries around upgrading or potentially just questions from today's webinar as well, in that case, still type yes into the chat. And again, we'll give you a call later today as well. So now I wanted to pass it back to James. We're going to do some Q&A. I have seen a Q&A pop in earlier in the webinar as well. So if you do have any questions on accounting or even any of the plans or anything that we've discussed today, pop them in that Q&A box or the chat, and James will answer them now for you.
Thanks, Ryan. So I can only see that we've got one question so far. So if you have anything to ask, anything that wasn't clear on employees and contractors, yeah, please type it into the Q&A now. But I'll just go through this one question that we do have. So it says, I would like to know the impacts of having someone as an employee versus company director, for example, a spouse. Okay, so an employee and a company director are two different roles. Okay, so a company director is actually someone who controls the business, right? They run the business on behalf of the owners. So they actually have fiduciary duty as a director to run the company and do things like that. If you were to pay a director, you would pay them as an employee essentially, or you could call it a director fee, for example. So it's the exact same way as you would pay an employee. You know, you would have to withhold tax on that payment to the director, and you would have to pay super on top of their wages. Okay, so a director fee versus an employee wage is exactly the same way in terms of accounting and tax. It attracts the same reporting requirements and superannuation requirements. Okay. The difference with having it, you know, if you add a director to your company, you have to actually add them in change your ASIC sort of information. So you actually do have to elect a director, and a director has decision-making power in the company. So, you know, if you were to, for example, pay a dividend out, you know, both directors would have to agree on it, and they would have to sign a director's declaration. So a director has decision-making power within the business. An employee simply works for the business. But in terms of paying an employee or a director, they are paid the exact same way. They're paid a wage, which again has to go through the PAYG withholding system and the superannuation system as well. I hope that answers that. Any other questions to come through? For No worries. Thank you.
Awesome.
I think Michael is putting his hand up for something.
Yeah, Michael's raised his hand. Michael, if you can type your question into the Q&A or the chat box, we can definitely answer it, or James is still on the line.
Does this matter when you are looking to employing friends and family as an early? You can it doesn't matter any stage of where your company is at. You can employ friends and family. That's no problem. You would still have to the wage would be the same. Like you still have to have. You know, I advise that you have the employment agreements in place with anyone you're hiring, even if it's family and friends, just so that, you know, the expectations are clear and that there won't be, it eliminates any sort of potential disputes. Okay, so even if it's friends and family, I advise that you still have the employment contract in place. But in terms of paying them, there is no issue with that. It doesn't matter. You can pay them as an employee. Okay, another question. How do you calculate peer? Sorry, Michael, does that answer your question? Right, awesome. Okay, so another question. How do you calculate PAYG withholding from one-off bonuses? The software used to have problems as it recalculates the bonus as continuous. I believe it should be deducted on a marginal rate. You are correct. It should be the PAYG withheld should be done on a marginal basis. Okay, so whatever that employee's marginal rate is, you would withhold at that rate. So in your accounting software, you probably have to do what's called a manual adjustment to that PAYG because, yeah, like you said, the accounting software doesn't recognize that it's a one-off bonus. It just lumps it in with the total pay. So what the accounting software thinks is with this bonus, this person's got a pay rise, and it's going to be this way moving forward. So yeah, you will have to do a manual adjustment in the payroll for one-off bonuses. Okay, and another thing for bonuses is you have to check whether the bonus has super on it or not. Okay, so if the bonus is related to ordinary time earnings, then there is super. But if it's another type of bonus, then it might not have super on it. So the ATO actually gives pretty good guidance on whether bonuses have super or not, or which type of bonus you're paying. So yeah, just maybe do a quick search on that, or get in touch with Lawpath and Pop, and we can help answer that question on the subscription. Does that answer your question? Awesome. Any last questions?
Alrighty, well, yes,
Awesome.
no further questions. Thank you so much, James, for answering what we had there.
No worries. Thanks, Ryan. Thank you, everyone, for joining the webinar. I hope you got some value out of that. And if you're interested in the legal and accounting advisory product, definitely get in touch, and we'll be able to speak to you through that subscription and provide advice for anything that comes along in your business from a legal and accounting standpoint. Especially if you're starting out, it's a whole new world of compliance and tax and accounting. So I'm sure there will be questions. So, yep, if you're interested, let us know.
That's right. Well, thank you so much again for your time, James. And thank you for everyone who's attended today.